So taking a look here at 8 o'clock, my average pip movement is about 30 pips. And this is, again, over the last 1 month. The average is about 30. The high gets to about 40, call it 41. You can see the low here is in the mid-20s. Actually, low 20s. And the highest pip movement is during the hours of 8, 9, and 10. You can also see there's another increase in volatility, or increase in pip movement, and that happens between 2, 3, 4 o'clock. By the way, what's happening at 2, 3 a.m., 4 a.m., Eastern Standard Time? By the way, these are all in Eastern Standard Time. What's happening during these hours? Frankfurt's opening. London's opening. Right? Asia's closing, 4 a.m. So you got Frankfurt opening at 2, London opening at 3, Asia closing at 4. Now, I mentioned open and close. Now, obviously, we know the Forex is a 24-hour market, but each financial center is not. And I use roughly an 8 to 5 day to determine when the different traders around the world and the different financial centers are coming in and out of the market. All right? Now, what if I want to get a little bit more of a specific look as to the nature of the market right now? What I'll do then is dissect this 1 hour breakdown of price action into what I could expect over the next 15, 30, 60 minutes, even the next 4 hours. So take a look here now. I've got the 15-minute chart showing me that I could have support down to 34.88 and resistance up at 35.19. Now what this is, by the way, is basically taking that 1 hour chunk of pip movement range and applying it specifically to the current direction of the market, whether it's weak or whether it's strong, and trying to decipher where there could be support and resistance within that overall range of 30 or 40 pips. Now obviously, the more time you give a market, the wider the range could be. Okay? And if I'm interested in mainly that likelihood for some sort of support around 34.98, that gap close, okay, then my main concern is, where is support going to be? Well, this is telling me that support in the next 15 to 30 minutes could head all the way down to the 34.88 to 34.84 level. Now, here's one thing I have to remember. I'd like to see a bounce, and the reason I'd like to see a bounce is I'd like to short the market in a trend continuation. But that's already happened to a certain degree. Let me show you what I mean here. Let's take a look at the chart. If I blow up this 60-minute chart right here, what I'm focusing in on was the fact that earlier in the day, I already had an opportunity, a couple opportunities to short based upon bounces into the wave. So 2 opportunities to do that already. What I'm looking at is potentially a third. So that's why I'm interested in where the support is waiting, because the support could likely be where at some point prices could move the euro US dollar back up to where I'd like to be able to enter another short sell. Does that make sense? I'd like to enter another short sell right around here. So if I can get up to the 34 EMA low, that's my zone of looking for that short. But I'm not going to get back up there until something bounces the market. So I'm not interested in necessarily support for a longer term buy. I'm interested in support for what could propel me to the resistance waiting at my wave. Now, in the meanwhile, if I wanted to play some aggressive buys, I could, but I won't do them on the 60-minute chart, because the 60-minute chart right now is actually showing me a downtrending market cycle. I'm not going to argue with that. The only market cycle at the time which was in distribution was really the 15-minute chart. And if you were to go back into this section here before we broke all this support, this was basically an aggressive buying zone. Okay, so basically what we had was we had a distribution market cycle on this 50-minute chart, and that gave me this kind of exhaustion buy zone between 35.20 and 35.10 right in here. Now this is super aggressive because distribution market cycles are far from clear psychologies, clear reads of psychology. An uptrend, a downtrend, far more, or even no trend, flat is far more clear. But when you have distribution, which is a more volatile sideways market, wider ranging, it's much more difficult to get a read on what prices want to do. So having said all that, we're still battling with 3,500. My distribution buy zone is long gone, but this would be an aggressive or aggro setup because I'm looking for a bounce in this area. And the reason, again, I'm concerned with the bounce, the reason I'm so interested in trying to find support is not because I'm so interested in picking a bottom in the euro-US dollar. Heck with that. What I'm looking to do is find what might be the reason for prices to bounce back up and give me a short sell based upon that 60-minute chart. Now I realize the closer we get to noon Eastern Standard Time, I might be running out of time to get up to that 35.50. I could consult the 30-minute chart and possibly see if there's a more near-term correction. 35, that could be interesting. I could look for a 35.35 swing short based upon the 30-minute chart and the resistance there. The problem is, and this is why I didn't choose this time frame to begin with, is that when prices did rally up into the wave before, they really didn't stop at the bottom line of the wave. They rallied much deeper up into it. I didn't like that, which is why I chose the 60-minute chart. So this would be much more aggressive. I'd rather still take the 60-minute 35.50 short based upon the major psych level and the much better respect of resistance of the wave. But I realize it's still about, gosh, how far away am I on that 60-minute chart? We just now cleared back above 3,500, so I'm still 45 pips away. All right, so I got to balance all that out. That's the challenge. We actually broke support, but we closed the gap. So we did get the gap close. And so again, the support is in main interest of finding where the market will bounce. My overall entry strategy here is to short in the direction of the 30 and 60-minute charts, and aggressively I was looking for maybe a near-term buy on the 15, but that wasn't really the core of my strategy for the euro-US dollar. What I really wanted to do is, I would have loved to have seen support there, but what I really wanted to do was see where the market would bounce. And again, understanding the pip movement range, let's take a look at that one more time. You can see here, this gave me a pretty good idea of where I could find support. By the way, on the way back up, this is where I could find resistance over the next 15 to 30 minutes. This will update in about 8 more minutes. This is obviously the 9:15 Eastern Standard Time update. So at 9:30, these will all adjust. The low, by the way, that I just made, okay, the low that I just made was 34.88. Now, let me just mention something. These prices plotted right at quarter after the hour. So the Power Stats, this particular study, projected the 34.88 and the 34.84 lows at quarter after the hour. It's 9:23 right now. So these levels are available beforehand. These are not adjusting minute by minute. Every 15 minutes they'll update, and this is where I felt comfortable that 34.88 to 34.84 could be near-term support. And again, the low for the current candle, well, if you want to look at the current, say, 15-minute candle, the current low for the 15-minute candle was 34.88. Not too shabby, right?